futures this morning. Diving over. Oh, and there's Wild Hog. He made it. Dave's here. UK Ray is here as well. Just real quick, pulling up the quick overall screener. 2,500 on the Russell, nearly 6,800 on the S&P 500. Crude popping a little bit this morning. Gold now at 39.50, clearly on its merry way to 4,000 as silver pushes toward. That's the number, though. Bitcoin making another screaming run higher, 125,000. And that's just kind of where we are as we dig into this Monday, presenting a lot of generational buying opportunities, a lot of AI focus once again, as usual. Continued melt up in the AI space. So once again, here we go. We'll dig into morning momentum. We'll talk about the runner at 9 o'clock. That is your breakout and breakdown cheat sheet for the day. And we're going to be talking about M&A. Big deal made today. Fifth Third Bank buying Comerica, big merger. And I'm going to tell you right now, it's very important to be locked up in the AI trade. But as I've noted, and I talked about the other day, the reserve pressure right now in the banking system is going to create ample opportunity for merger and acquisition activity. Now, before we get into this, Wild Hog is just saying, hey, GB, good to see you. Ed Mines, you love M&Ms and High Tide. Okay, we'll go from there. Zay, Mark, good to see you. Good morning. The stocks that are worth engaging and trading today, and we're going to be focusing a little bit on those banking stocks as well as the AI names. Whether the market's safe to trade, well, that's built around the momentum numbers, exactly where smart money is positioning, and your top screens for today. Remember, when you get a day like this, when you have these huge moves like we've already seen today on AMD, we'll pull up that chart for a real hot second. Yeah. Whew. Let me find what I need to find. Stop share. Pop over to good old Thinkorswim. There's your run this morning. I mean, that is a violent move to the upside. AMD adding, well, where are we right now? AMD is now currently up 35% this morning. It's a reminder that you don't just need to speculate on stocks if you're simply understanding where some of the key technicals are and trading to the downside, selling some spreads on some of these names. You can wake up with 100% gains. That is, I feel bad for anybody who was selling those calls at 180 because this just absolutely has dominated this morning. NVIDIA down a little bit on the news, but we're going to dig into that momentarily. Get back to our previous screen. There we go. All right, look at us go. 849. Let's get it rolling. All right, momentum at +4 right now, though. This is actually pretty interesting, is it not? That it is the tech sector that continues to be the breakout sector. Shocker, right? We continue to expand liquidity globally. We continue to pump capital into the global system. We are seeing that out of China right now. We are seeing support and accommodation right now out of the U.S. and now the Bank of Japan, which we'll talk about right now in a couple of seconds. Basically, they're just going to keep devaluing the yen, which will continue to provide ample support to global markets. On the S&P 500 this morning, it's Coin, it's Hood, it's IVZ, it's Micron, all coming off that solid move recently. And then we've seen some of these other breakdown stocks, particularly in the cyclicals. It's been the things that are trying to link to the underlying economy. That includes the MGMs of the world, Caesars, Apollo, CCL. But the Russell strength is extraordinarily strong. We saw huge moves out of Plug the other day. We're seeing things like Laser and Children's Place squeezing higher after the second strongest squeeze week last week. We're at 4, though. Overall, we are green across the board. And once again, as we just kind of look at the SPY at this very close moment, you see that we are well above that 8-day moving average, that purple line that we always follow. All right, so let's dig into the bigger news. Let's get my camera down a little bit so it doesn't look like I am shrinking and falling into the bar itself. There we go. Look at that. All right, so the big story today is the AI infrastructure boom. OpenAI has taken a 10% stake in AMD, and I just want you to take a little bit of a step back and say, wait a minute. AMD, which is, once again, a $360 billion company. What is the value of OpenAI, right? Private company. 500 billion. It's $500 billion company. Where do you think this thing's going to IPO at? Probably somewhere in the $1 trillion to $2 trillion range. And again, it continues to signal that new phase of the AI arms race. And this is exactly one of the things we're going to be digging into tomorrow in our masterclass, NVIDIA 4D. It is a reminder that this is what is driving the market. This is where all of the outperformance has come in the last 18 months. And we still have another 18 months of this in the equity markets as liquidity continues to rise. OpenAI committing to a multi-gigawatt chip purchases and hardware lock-in, vertical integration blurring the line between the chip makers and the AI platforms themselves. And that vertical integration, which we're going to discuss a little bit tomorrow as well, is really one of the core trends that will drive up valuation. Competitive pressure is, again, going against this morning NVIDIA. And NVIDIA is actually down a little bit this morning, down 1.4%. You have to be insane, though, if you think NVIDIA is not going to respond to this. So again, OpenAI signaled a major chip supply partnership with AMD. It's a loss of business for NVIDIA. It is a massive new computing push that's going to run on AMD chips. But once again, wait and see how this company responds. What do traders need to watch today? Key things. Does AMD hold that gap or fade? Again, a 35% move. And it is a reminder that if you are with us tomorrow, you will learn about the inverse ETFs and the other types of proxies out there that allow you to trade AMD on a day like today, because there are special tools in place that you don't even need options, and you don't need to short the stock in traditional methods where you have to borrow the stock, which could be very expensive, sell it into the market, and then try to buy it back. It's about understanding the very specific tools in place that give you the opportunity to trade not just options, but also on leverage using very special tools. We're going to dig into that tomorrow during our masterclass at 2 o'clock. Still plenty of time to sign up. The sympathy flows, we'll be watching NVIDIA, TSM, and the AI ETFs. Heavy focus today on volume weighted average price. And with the options flow, that question of AI rotation or, again, exhaustion. This is just another headline of many that continue to drive every single market day. And it's one of the key reasons why we are focusing on NVIDIA 4D the way that we are. All right, this is the big one, and we're going to dig 10 minutes into this later today. So we got 5 minutes until we bring the runner out, right? The runner. We're going to talk about our breakouts and our breakdown stocks. But woof, as you know, last week I was warning about the reserves in the banking system, and this is very important because, as I've noted, we were at about a $3 trillion buffer on the reserves. And again, reverse repo is gone. So the question is, does there create some level of shock in the financial system itself? We're going to spend 10 minutes on this at the end of this session because I want you to see there is ample opportunity to make money on this story today. This is one of the things that we have been waiting for the better part of about a year. Because again, when Scott Besson came in and we heard all of the chatter and talk about potential M&A activity in the regional and community banking space, the question was not when, or was not if, but when would it happen? The key thing here is reserves. It is about what is known as deposit pressure and regulation issues. So during the Biden administration did not want a lot of M&A activity. They didn't want more mega banks. The reality, unfortunately, was all of these banks faced extraordinary pressure on their deposits. So what happens is there's really only one of two ways to build your deposit base as a bank. The first is people move to where you are. So think about it this way. Florida during the pandemic, a lot of the community banks saw a big influx of their deposits because people were moving there, starting businesses there. But we were seeing flows out of places like Illinois and New York and New Jersey and other places across the country where population was declining. So you have a choice. You can either build organically, or second, you buy another bank. And going back to 1987, there were 15,000 banks. There's about 4,000 now. They didn't all blow up. They got bought. We're going to dig into this because Fifth Third is a massive bank in the Midwest and obviously in Florida where there is growth. At Comerica, big name as well. $10.9 billion deal. They are merging. Merge the companies. Merge. It's showing systemic weakness, really, more than anything else, and a strategic power play. Look, Fifth Third, there are a handful of these banks that are going to continue to grow in size and scale, names like Truist as well. Scale is the only defense, and we're going to dig into that. And it's really a question of understanding the differences between acquirers versus target performance. And we want to talk about our next takeover candidates, which I will be talking about extensively today at 3 o'clock as I close out the market. We're going to spend about a half an hour today on the M&A wave in the banking space, and then we're going to spend the rest of the next 6 weeks talking about NVIDIA. Get ready. All right, so last thing, geopolitical shocks. This is significant. A leadership chaos in Japan and France, sending a global macro into flux. New prime minister signaling fiscal easing in Japan. Again, this is all about the capital wars. It's all about the battle between the United States and China and the ongoing weaponization of the yen in the global markets. In addition to this, France, well, they had a government. We'll see what happens. Cue the Bastille Day song. Bastille Day, sleeper event of the summer. Eurozone credibility continuing to get hit, if it ever had credibility, but we'll go from there. FX and bonds front running the policy panic. That's very evident. What do you have to watch? Just watch the yen. Just watch the yen. The expectation is of more intervention likely coming. And I want to remind you that the Bank for International Settlements came out in April with a huge report where they basically outlined the Federal Reserve is not independent anymore, nor are most Western central banks. And the way that we describe this is if you move into a house, which I just did, and I turn my thermometer on, or my thermostat on, the thermostat should only control my house. But let's just say that 10 years from now, the house right next door to me, they change their thermostat and it alters the temperature in my house. That's what's happening with global monetary policy, the actions of central banks. So the Federal Reserve here in the United States cannot take action without first paying attention to what's going on in Tokyo or Brussels or Frankfurt or London, and in many cases, Beijing. So once again, these types of moves, these types of events can impact the policy decisions that the Federal Reserve will be making in the coming months. Keep in mind that the Federal Reserve wanted to start tightening back in 2016, 2015. They couldn't because it caused serious problems in Europe, and it also caused problems in China. They wanted to continue with their path of higher interest rates in 2022, but they couldn't because they were blowing up small emerging market nations in the process that were holding U.S. debt and couldn't address their ongoing debt load. And secondly, they also were impacting England. So these types of moves are very significant. We're looking at Eurozone bonds spreads widening. And the question is, does the money just flow back to the United States? And that's kind of been the trend, right? Because we have gone since our first round of QE from about 33% of global equities to 71% and climbing. So once again, liquidity expanding, the AI trade, people chasing alpha globally, turning back to the U.S. markets. And these types of geopolitical shocks, particularly if their central banks have to intervene, may be very, very bullish for the United States as well. All right, 9 o'clock, that can only mean one thing. Where are you, secret agent Charlie? I need you. You got it. You know the score. All right, we're going to start in the housing sector. So this is actually a pretty simplistic approach to the markets. And again, we've seen some recovery on the backside of that move on the regional banks. Remember, we hit that point last week where effectively KRE had recovered because, well, there you go. It recovered because we saw that intervention from the central bank. Ugh. Let me get over to Big swim. So let's take a little bit of a step back on this one. We'll look at the 5-day, and we see PHM continuing to squeeze higher, coming off of that low last week, 130. And that's kind of been everything. It's been the regional banks. It's been the housing stocks. What's going on here? Well, again, Trump would like Fannie and Freddie to help address the ongoing shortage of housing in the United States. Now, PHM is breaking out a little bit, pushing back above that 20-day and 8-day EMA. We've had a nice little pop from 132. And if I'm looking for ways to potentially trade this, I'm going to just do what I prefer to do, which is, again, we talked about this on Friday. I'm looking to sell spreads. I'm looking to sell under that 50-day moving average, sell under that 20-day moving average. And if I look out into a place like November, I can find a trade where the 125 put, which is all the way down here, right? The 125 put, and selling the 125 and then turning around and buying the 120. Come on. There we go. All right, let me pull up spread vertical. The 125, 120 should not be that wide when we open today. But right now, if you put up about $408 to make 92, you have a 78% probability of profit, a 22% return, and a break even of 124 on PHM. Currently, the stock 124 is about 6% below the 50-day EMA, and we have not been under the 50-day since we hit 101 back, or 100 back in mid-June. So you have a combination of increasing liquidity, you have central banking policy, or forgive me, fiscal policy, and you have the Trump administration providing necessary support. NNOX, Nanox Imaging. Don't know what you do. Could be anything. Could be absolutely anything. NNOX is pushing higher above those key moving averages that we discuss every single morning. And we are at 305 after a pronounced sell-off. This is an Israeli imaging company, allegedly. And we are looking at 388, pushing above that RSI and MFI. ADX crossover looking positive as well. And this is just one of those stocks that I'm going to look to buy and see if we can get back above that 50-day moving average. 50-day moving average is kind of where our focus needs to be at this moment. That's around that 415 level at the moment. So at 415, that is where we're looking for a potential move back to $5. In addition, we have PCT. Pure Cycle. This has come up quite a bit. Plastics. Is this a plastics company? Pollution treatment. I thought it was something from The Graduate. Oh well. 1359 currently where we're sitting at the moment, pushing a little bit higher this morning. Again, if we look for this, simply just trying to buy it and looking for a positive move over on that 8-day EMA with that 20-day EMA. You currently have a RSI MFI above 50. You have a positive move on the ADX. I prefer just to buy the stock, setting a stop back at around 1330. Okay? Pretty good. Pretty simple. Keep it easy. Good day, Secret Agent Charlie. Good to see you. All right. On the downside, talked a little bit about this as well. Chewy. Man, poor dogs. My dogs are not handling this move very well. I will just let you know that. Chewy breaking down a little bit. And you see that crossover. We've seen a crossover on the 8 and the 20. This is internet retail. They reported strong revenue growth on the 15th, and the stock has just completely and totally turned around since then. Consumer pressure. I still don't like shorting Chewy. I don't like shorting a lot of pet names. And the reason is Americans have continually proven that they are willing to allow their dogs to eat very, very well while they will eat ramen. And you think I'm kidding about this. So I have a friend, went to graduate school, business school with me. He started 3 pet food companies. He sold 2 of them to Purina. And the last one that he was building was a $20 can of cat food that he made for $2, and he could not keep it on the shelves. He couldn't keep it on the shelves. That was the margin. Think about that. That's what we do. The pets eat like kings, and we eat like paupers. Natural gas services in play as well. Look, I think this is an interesting when we're talking about natural gas. I would look for a bounce off of this 50-day EMA on the oil and gas services, particularly given the fact that we have seen strength in natural gas. Biotech, AI, crypto, looking at these groups, looking at the rotation that we're seeing a little bit. Obviously, the tech is very strong. Utilities very strong. On the backside of just the fact that this is the backbone AI trade. So utilities, 7.3%. If you are not an aggressive trader or you're not an aggressive investor willing to follow the flows, consider the fact that you can trade in the utility space, higher interest rates, expectation of lower interest rates from the Fed, lower Fed funds rate, but the utilities, some of these closed-end funds paying 8, 9, 10% just around utilities and still trading at discounts to their net asset value. We'll dig into some of that stuff today as well at 3 o'clock, because again, it's not just about trading the tech. And as we'll dig into during our NVIDIA 6-week boot camp, we will be digging into the utility space as well, because once again, that is a very misunderstood form of momentum in the backside of this massive trend. Basic materials as well, 5.1% up on the month. Look, this is all just about gold, right? The GDX, the GDXU, things along those lines. Just seeing this stuff continue to burn and squeeze higher. And since we saw that positive crossover in August, the GDXU has gone from 73 to 217. Congratulations to JP Morgan for taking that term, the debasement trade, all the way to school. We called it the hedge of the morrow last March. We also called it the debasement trade 2.5 months ago when we were talking about this on the air. But again, as we continue to see, gold remains strong, silver remains strong, copper as well. Why is copper doing what it's doing? Copper is doing what it's doing because the central bank in China continues to focus on its own monetary policy, which is very, very bullish for anything in the industrial side. We are seeing a run everywhere right now on raw materials, the underlying economy, the things that actually matter at the end of the day. Everybody's swept up in a lot of the AI stuff. Yes, I get it. But once again, when we dig into the masterclass, you're going to see all of the raw materials that are going to be required for this innovation. We're going to have a deeper conversation about geopolitical risk. We spent the weekend talking to a bank in Europe, and we were effectively explaining to them that where we are up in Finland is easily the most geopolitically nice place to be, plenty of resources, it's cool. And all they wanted to do was say, well, we want to work in Germany. And we just said, well, good luck with that. We're going to stay where we are. There's a lot more to the AI trade. There's a lot more to the opportunities that persist that are not just the pick and shovel companies. NVIDIA tells you the full story of it. But once you unwind everything, you're going to see opportunities in materials, in utilities, and even in the banking sector that are linked to some of these major players in this space, as we have seen this morning. All right, this is a company that has easily the dumbest name in the financial markets, Shoe Carnival. Yeah, that's a thing. This is breaking out right now to a positive move on the RSI. We have not seen volume follow, but the ADX crossing over, pushing back above its 850 and 20-day EMA. We are looking for a positive crossover on the MACD. I will remind you about that today if it arrives. We are looking for a play back to around 25 on a stock currently trading at 22.23. And the final one I want to just add is MTH. So we talked a little bit about the company earlier, Pulte. The reality is, if housing is going to get more affordable, it's going to have to come from the affordable housing stocks, right? It's going to have to come from the names that are in this realm of public policy of affordable housing stocks. Meritage Home falls into that level. Cavco falls into that level. And I want to explain something very simply, right? So if you understand what the credit fund that I worked for, right, $3.5 trillion credit fund, it's one of the GSEs. It's one of the two GSEs. And while we were working back in around 2016, 2017, we were making the argument that you're seeing right now. We were effectively arguing, look, housing is not going to get any cheaper anytime soon. And we have to address the supply side of this. And what we were specifically focusing on were the companies like Meritage, like Cavco, like Champion, because those companies require less regulatory oversight. They require cheaper materials. You don't need the bricks and sticks. What you need is the appearance that the house in the very expensive neighborhood is constructed for $2 million. The reality is you could build it for a lot cheaper if you're using different types of materials. That's one of the key things. Also, on the regulatory side, there are 25,000 regulatory groups in the United States that oversee housing. 25,000. Local, regional, municipal, county, state, federal, environmental. All of these things impact housing pricing. So once again, what we're seeing on MTH coming back above its 50, back above its 20, getting that pattern, getting that strength right now on the backside. I just like selling spreads, but I'm happy to buy MTH as well. Looking at MTH right now, currently trading, where are we right now? 74.85. Possibility of a move back up to 84.85 if we see some sort of policy change coming in the next couple of days that would be accommodative to this market. All right, on top of that, ARCB, I don't even know what we added that at the last second. ARCB, okay. Well, I guess I'll take a quick look at it. Why not? Can't hurt. ARCB. ARC Best Trucking, I'm out. Too much chop. So again, focus on these housing stocks. Look to sell spreads to the downside where there's high probability of profit, and just continue to target 20% gains in a relatively short period of time. All right, on top of this, let's get to the last part, okay? So as I've noted, the KRE rebounded and the regional banks have rebounded. Now, there has been that positive move and support in the Japanese markets. There has also been that positive move because of the regional banking space and the questions around reserves. The U.S. Treasury Department stepping in with that $5 billion purchase on longer duration bonds last week. But why does all of this matter? Well, once again, I encourage you to keep a very close eye on the DPST. The DPST is the positive momentum triple bull ETF around regional banks. What is going on here? All right. This is basically the most important financial trend of the last 40 years in terms of how finance works, right? I'm not talking about AI. I'm not talking about the concept of, this high tech. I'm talking about the actual money in, money out of the financial system. Okay. In 1987, there were 15,000 banks. Today, there's about 4,000. They did not all implode. There was a savings and loan crisis back in the 80s. Sure. We had a banking crisis in 08. Sure. We just lost 3 big banks back in 2023, March 2023. But the reality is, when there are these reserve pressures, as I noted, you can either build or you can buy, and buying has been the optimal trend. It is not just about the regional banking reserve issues as well. There are underlying trends that impact this space, not just at the regional space, but also at the community banking level, that are absolutely critical to keep in mind. Cybersecurity costs. Back in, I believe, 2021. Back in 2021. Here, let me find the exact number. JP Morgan spent 2018. JP Morgan spent $600 million on cybersecurity in 2018, more than the market capitalization of, at the time, 200 banks trading on domestic exchanges. Okay, so why does this matter? Because many regional banks and many smaller banks, community banks, cannot afford $600 million in cybersecurity costs. Oh, and by the way, a couple of years ago, some banks still didn't have ATMs. Some banks still didn't have apps. A lot of banks don't have apps. The technology costs of competing are extraordinary. Smaller banks don't attract talent the way that big banks do. In the regional banking space, community banking space, it's an old school game. Most directors on boards are in their 70s and they want to retire. Their children became bankers, probably. If they did, they went to JP Morgan. They went to Morgan Stanley. They grew up in a banking household, and therefore they want to bring forward economic opportunity. No, they want to make $300,000 a year and be able to get access to a bagel anytime they want, anytime, any sandwich they want, any drink they want, everything in New York City. Anytime a bodega is open, I can't do that in Omaha. I want to live where the action is. So they do. And then they go into private equity, right? They don't stick around and stay at the regional banking space. They don't stay at the community banking level. So what happens? Well, you have these aging boards. You have the inability to attract talent. You have the inability to get people to stay. You have the challenges associated with cryptocurrencies, which are going to, some of these crypto banks are going to take over the mechanisms of traditional banking. So what happens here? Well, we start to look at valuations of banks because the banks that are cheap and have relatively solid ratios, and on top of that, these banks are in strategic areas that it just makes sense to merge. The deal flow can and will pick up very aggressively, particularly on the fact that there was ample demand over the last 4 years for deals, and the Biden administration was not into it at all. Pent-up demand has been monstrous. One of my best friends works in a major bank up in New York, and they hire Goldman's regional banking M&A director. They are waiting. They are patient. They are excited about the potential that the regulatory changes will come along that will make it easier for M&A activity, and there will be a flurry of activity in this space. So how do you trade this? Well, again, I tell you that we want to focus on banks that have lower tangible book values. We're going to dig into that today. And this all goes back to the Thanksgiving conversations that I have with my father-in-law, who's one of the top, if not the top, community banking analysts in the country. What are we doing? What are we focusing on? How are we trading this? We want to look for regional banks and other types of banks that become attractive takeover targets. We want to look at valuations. And then we want to just do the very simple thing. Instead of buying the stock, we're going to sell spreads. We're going to sell premium to the downside at a high probability of profit and look for these banks to turn back around and move higher, particularly if we start to see an M&A wave start to form. The KRE has popped back above this key moving average. That is bullish for regional bankings in the short term. If you're going to trade the KRE, draw a line in the sand at the 63.50 level, sell to the upside. See if this momentum builds over the week, because a retest of the $66 level is entirely possible on this narrative alone. This is a big deal, Fifth Third and Comerica, right? Very big deal. Comerica is Comerica's out of Dallas, but a deal of this size in the regional space is going to create more ammunition for other people to sit around and go, wait a minute, what do I need to buy? Who do I need to build in order? Because again, when you look at the banking space, you have the mega banks and then you have everybody else, and everybody else can't be chasing 6, 7, 8. They've got to get, or they can't be chasing being 9th, 12th, 13th, 14th. They got to get up into that 7, 8, 9, 10 tier, because that's where they're going to potentially be able to benefit from central banking policies that may shift in the near future, and treasury policies that will be bullish as well. So we're going to dig into this trend a little bit more today at 3 o'clock. Don is coming up momentarily. Remember, the train is leaving the station tomorrow on our masterclass with on NVIDIA 4D. I hope that you take the time to just take a look at the presentation. Give it a shot. Again, 30-day money-back guarantee on that as well. And we will continue to dig deeper into both the regional banking opportunities and, of course, the AI trade as we move. Jerry, good to see you. Thank you so much. I hope you all have a great day. Don's coming up in a minute. Take care.